Journey of Insurance presented by Niriksha, MPM Government First Grade College, Karkala. Meaning of insurance. Insurance is a means of protection from financial loss. It is a form of risk management primarily used to hedge against the risk of a contingent or uncertain loss. An entity which provides insurance is known as insurer, insurance company, insurance carrier, or underwriter. A person or entity who buy insurance is known as an insured as a policyholder. The insured receives a contract called the insurance policy, which detail the conditions and circumstance under which the insurer will compensate the insured. The amount of money charged by the insurer to the policyholder for the coverage set forth in the insurance policy is called the premium. History of insurance in the world. The story of insurance is probably as old as the story of mankind. The concept of insurance is largely a development of the recent past, particularly after the industrial era, past few centuries, yet its beginnings date back almost 6,000 years. Life insurance, in its modern form, came to India from England in the year 1818. Oriental Life Insurance Company, first started by European in Calcutta, was the first life insurance company on Indian soil. All the insurance company established during that period were brought up with the purpose of looking after the needs of European community and Indians natives were not being insured by these companies. However, later with the effort of eminent people like Babu Mitilal Sale, the foreign life insurance companies started insuring in Indian lives. But Indian lives were being treated as substandard lives and heavy extra premiums were being charged on them. Bombay Mutual Life Assurance Society heralded the birth of first Indian life insurance company in the year 1870 and covered Indians' life at normal rates. Starting as Indian enterprise with highly patriotic motives, insurance companies came into existence to carry the message of insurance and social security through insurance to various sectors of society. Bharat Insurance Company 1896 was also one of such companies inspired by nationalism. The Swadeshi movement of 1905 to 1907 gave rise to more insurance companies. The United India in Madras, National Indian and National Insurance in Calcutta and the Cooperative Assurance at Lahore were established in 1906. Some of the important milestones in the life insurance business in India. First one is 1818. Oriental Life Insurance Company, the first life insurance company on Indian soil, started functioning. Next one 1870. Bombay Mutual Life Assurance Society, the first Indian life insurance company, started its business. 1912. The Indian Life Assurance Companies Act enacted as the first statute to regulate the life insurance business. 1928, the Indian Insurance Companies Act enacted to enable the government to collect statistical information about both life and non-life insurance business. 1938, earlier legislation consolidated and amended to by the Insurance Act with the objective of protecting the interest of insuring public. 1956, 245 Indian and foreign insurers and provident societies are taken over by the central government and nationalized. LIC formed by an act of parliament. LIC Act 1956 with a capital contribution of rupees 5 crore from the government of India. The general insurance business in India, on the other hand, can trace its roots to the Triton Insurance Company Limited, the first general insurance company established in the year 1815 Calcutta by British. Some of the important milestones in the general insurance business in India are 1907 the Indian Mercantile Insurance Limited set up the first company to transact all classes of general insurance business. 1957 General Insurance Council, a wing of the Insurance Association of India, frames a code of conduct for ensuring fair conduct and sound business practices. 1968, the Insurance Act amended to regulate investment and set minimum solvency margins, and the Tariff Advisory Committee set up. 1972, the General Insurance Business Nationalization Act 1972 nationalized the general insurance business in India with effect from 1st January 1973. 107 insurers amalgamated and grouped into four companies, which is the National Insurance Company Limited, the New India Assurance Company Limited, the Oriental Insurance Company Limited, and the United India Insurance Company Limited. GIC incorporated as a company. History of insurance in India. In India, insurance has a deep rooted history. It finds mention in the writings of Manusmriti, Dharmashastra, Arthashastra. The writings talk in terms of pooling of resources that could be redistributed in times of calamities such as fire, floods, epidemics, and famine. This was probably a precursor to modern day insurance. Ancient Indian history has preserved the earliest trace of insurance in the form of marine trade loans and carriers contract. Insurance in India has evolved over time, heavily driving from other countries, England in particular. 1818, the life insurance business in India with the establishment of Oriental Life Insurance Company in Calcutta. This company, however, filed in 1834. In 1829, the Madras Equitable had begun transacting life insurance business in Madras Presidency. In 1914, the Government of India started publishing returns of insurance company in India. The Indian Life Assurance Companies Act 1912 was the first statutory measures to regulate life business. In 1928, the Indian Insurance Companies Act was enacted to enable the government to collect statistical information about both life and non-life business transacted in India by Indian and foreign insurers, including provident insurance societies. In 1938, with a view to protecting the interest of insurance public, the earlier legislation was consolidated and amended by the Insurance Act 1938 with the comprehensive provisions for effective control over the activities of insurers. The Insurance Amendment Act of 1950 abolished principals agency. However, there were a large number of insurance companies and the level of competition was high. There were also allegations of unfair trade practices. The Government of India therefore decided to nationalize insurance business. An ordinance was issued on 20th January 1956 nationalizing the life insurance sector, and Life Insurance Corporation came into existence in the same year. The LIC absorbed 154 Indian and 60 non-Indian insurers, as also 75 provident societies, 245 Indian and foreign insurers in all. The LIC had monopoly till the late 90s, when the insurance sector was reopened to the private sector. The history of general insurance dates back to the Industrial Revolution in the West and the consequent growth of seafaring trade and commerce in the 17th century. It came to India as a legacy of British occupations. General insurance in India has its roots in the establishment of Triton Insurance Company Limited in the year 1850 in Calcutta by the British. In 1907, the Indian Mercantile Insurance Limited was set up. This was the first company to transact all classes of general insurance business. 1957 saw the formation of the General Insurance Council, a wing of the Insurance Association of India. The General Insurance Council framed a code of conduct for ensuring fair conduct and sound business practices. In 1968, the Insurance Act was amended to regulate investment and set minimum solvency margin. The Tariff Advisory Committee was also set up then. In 1972, the passing of the General Insurance Business Nationalization Act, general insurance business was nationalized with effect from 1st January 1973. 107 Insurance was amalgamated and grouped into 4 companies, namely National Insurance Company Limited, New Indian Assurance Company Limited, Oriental Insurance Company Limited, and United India Insurance Company Limited. The IRDA opened up the market in August 2000 with the invitation for application for registrations. Foreign companies were allowed ownership of up to 26%. The authority has the power to frame regulations under Section 114A of the Insurance Act 1938 and has from 2000 onwards framed various regulations ranging from registration of companies for carrying on insurance business to protection of policyholder interest. In December 2000, the subsidiaries of the General Insurance Corporation of India were restructured as independent companies, and at the same time, GIC was converted into National Reinsurance. Parliament passed a bill delinking the 4 subsidiaries from GIC in July 2002. Today, there are 31 general insurance companies, including the ECGC and Agriculture Insurance Corporation of India, and 24 life insurance companies operating in the country. The insurance sector is a colossal one and is growing at a speedy rate of 15 to 20%. Together with banking service, insurance service add about 7% to the country's GDP. A well developed and evolved insurance sector is a boon for economic development as it provides long term funds for infrastructure development, at the same time strengthening the risk taking ability of the country. Insurance working. First one, the evaluating risk. Companies that buy insurance policies transfer their risk to the insurance company in return for paying their premiums. They can also share the risk, and insurance companies have to consider that if they have lot of policies in one area, there is a natural disaster, many customer will make a claim. The insurance company may not have collected enough premiums to cover so many claims. To prevent such a problem, insurance company pass on some of the risk to the other large financial firms that offer reinsurance. Thank you for watching.